You know, it feels like every other day there's a new headline screaming about financial markets, whether it's crypto soaring or housing plummeting. It can be a lot to keep up with, and frankly, a bit overwhelming sometimes just trying to sort through the noise.
It absolutely can be.
Yeah.
Yeah, the sheer volume of information is, well, it's daunting. But that's precisely why we're here, isn't it? To take a deep dive into these sources, pull out the most important insights, the key nuggets, and help you understand what's truly significant in today's very dynamic financial landscape. Our mission today, really, is to cut through that noise, give you a clearer, maybe more nuanced picture of what's happening in both the crypto world and the real estate market.
Okay, let's kick things off then. Let's dive into the crypto world. It's a place that feels like it's constantly reinventing itself. And like you said, it's not just about Bitcoin anymore, is it? We're seeing some major players making, well, strategic shifts.
That's exactly right. Yeah. What's fascinating here is this strategic pivot we're seeing, like from companies like BIT Mining. Now, this was a former Chinese sports lottery firm.
Oh, interesting background.
Yeah. Became a crypto miner, and now they've announced plans to convert existing crypto holdings and raise between $200 and $300 million, all to accumulate SOL tokens, that's Solana, as part of an expanded treasury strategy.
Wow, 200 to 300 million into Solana. And that news alone, what did it do to their stock?
Yeah, it caused their shares to surge 150% in pre-market trading. Huge jump.
Okay, so beyond just their stock price bump, what does a move like this by a company like BIT Mining, what does it really signal for the broader crypto market?
Well, their CEO, Shanfeng Yang, he described it as a significant shift, moving beyond just Bitcoin mining, getting into broader blockchain value chains, as he put it, to deliver sustainable shareholder returns. That's the goal. And they also intend to stake SOL.
Right, staking.
Yeah, and operate validator nodes. So basically, staking means they lock up their Solana tokens to help secure the network, and validator nodes are the computers verifying transactions.
And they get rewarded for doing that.
Exactly. They earn on-chain rewards, and this isn't an isolated incident either. Bit Digital, another company, they boosted their stock performance similarly by pivoting their treasury strategy from Bitcoin to Ethereum. So it really highlights this diversification trend among these proof-of-work mining companies.
The ones using lots of computing power.
Right, those ones. They're moving into proof-of-stake cryptos.
Yeah.
Which, is a more energy-efficient method where you just lock up coins. It's really about finding new ways to generate value, I think, in a market that's, well, maturing.
That's a really crucial insight into how the crypto businesses themselves are evolving, adapting. Now let's turn to the big one, Bitcoin itself. I mean, its recent performance has certainly been a major talking point. What does its aggressive run really tell us about its evolving role? Is it changing?
Bitcoin's definitely had an impressive run, no doubt about it. It's currently trading around, $118,617.80, somewhere around there. And back in July, it marked a new all-time high, smashing previous records of $112,000. But what's truly insightful here, I think, is how Bitcoin is, well, it's rapidly maturing from what was once seen as kind of a fringe asset.
Right, very niche.
Very niche, exactly, into becoming more of a mainstream hedge against inflation. And you see evidence for this everywhere. Massive inflows into spot Bitcoin ETFs, skyrocketing institutional adoption, much clearer regulations coming online.
And even political nods, right?
Yeah, we're even seeing, unwavering political support. Figures like President Trump expressing optimism. You've got major entities like MicroStrategy, Metaplanet.
Yeah.
They're boldly adding BTC to their balance sheets. That signals really strong confidence in its future. Plus, hints from the Federal Reserve about potential future rate cuts are also contributing to the market enthusiasm. So the key takeaway really is Bitcoin is gaining significant legitimacy, real acceptance in traditional finance.
That makes a lot of sense. That context is important. And given this shift then, this change in perception and adoption, what are the price predictions looking like for Bitcoin down the road? Because some of these numbers we've seen are, well, they're truly astronomical.
They are. The long-term forecasts are indeed aggressively bullish, very much so. Coinpedia, for example, they expect BTC to create a 2025 high of around $168,000. Other predictions suggest it could reach $175,000 by 2025.
Okay, so that's next year, but longer term.
Right. Looking further out, long-term forecasts estimate BTC prices could hit $900,000 by 2030. And even beyond that, some projections, well, they go as high as $377 million by 2050.
$377 million. Wow. What would need to happen for that kind of prediction?
Yeah, I mean, for those kinds of extreme long-term projections to materialize, it's a big if. It would require Bitcoin to essentially become like a foundational global reserve asset. displacing traditional currencies to a significant degree. And institutional adoption would need to reach levels far, far beyond what we see today. It's definitely very speculative, but it's a possibility that's widely discussed within the crypto community.
Absolutely. Okay, and thinking about the here and now, how has Bitcoin been weathering recent global events? We've seen quite a bit of geopolitical volatility. Does it truly act as a digital gold in those times of crisis?
It's a good question. Its performance in the first half of 2025 was admittedly mixed because of that macroeconomic and geopolitical volatility you mentioned. For example, tensions between Israel and Iran back in June, that sent BTC sliding down to $98,000.
Right, I remember that dip.
Yeah. But following a ceasefire announcement, Bitcoin rebounded really quickly and actually established a new all-time high shortly after. And what's interesting is the on-chain data. That's the information recorded right on the blockchain. It revealed a sharp increase in whale transactions.
Whales being the big holders.
Exactly, the big players, large transactions.
Mm.
This, along with rising spot trading volume, it indicated really strong buy-the-dip behavior and renewed confidence. We even saw dormant wallets, ones that hadn't been active, coming back online. So the insight here, I think, is that Bitcoin is showing increasing resilience and a rapid ability to recover from these external shocks, which is, a sign of its growing maturity as an asset.
That's a really comprehensive look at Bitcoin, super helpful. But like we said, the crypto world offers a lot more, especially in that exciting and maybe sometimes chaotic realm of meme coins, particularly on Solana.
Oh, yeah. Solana has truly become the heart of meme coin mania, no question. Its technology is just perfect for it. Ultra-low transaction fees, like averaging around 0.0000
So basically nothing.
Practically nothing. And high speed, up to 65,000 plus transactions per second. So this allows for fast, frictionless trading, easy minting of new coins. And it fosters what's known as degen culture.
And you mentioned degen culture. For listeners who might be new to that term, could you maybe unpack that a little? What does that often entail in this meme coin space? And beyond just the funny names, what's the real driving force, the engine behind this meme coin mania on Solana?
Sure. Degen culture, it basically refers to a highly speculative, high-risk trading environment, often driven by the chase for quick profits rather than, say, long-term fundamentals. People ape, that's the slang for investing aggressively, sometimes impulsively,
Right.
with the understanding that prices can swing wildly, up or down. And the driving force for this mania on Solana, it's really that combination. It's technical efficiency, cheap, lightning-fast trades, which are essential for the rapid ups and downs of meme coins, and a strong, really engaged community that kind of fosters these viral trends. Some prominent examples, you've got him for Dog with That.
Dog with that, okay.
Yeah, it quickly became the undisputed king of Solana meme coins, reaching a market cap over $3 billion. Then there's BobiNK, kind of the original Solana dog coin, which helped reignite the Solana community. Pui PSAT, leveraging nostalgia. And interestingly, the political parody coin Trumpic, launched in January 2025.
Oh, that one too.
Yeah, that's also become one of the most traded meme coins, holding a $1.9 billion market cap. And for a really unique one, Fartcoin.
Okay, Fartcoin.
Fartcoin, but by April 2025, it became the third largest Solana meme coin by market cap.
The names are certainly unique, memorable, I guess. But okay, for anyone hearing about this for the first time, maybe getting tempted, what are the serious risks, the things one absolutely needs to know before they ape in?
Right. It's absolutely crucial. Know the risks before you ape in that crypto slang for investing heavily or maybe impulsively without enough research. Meme coins are highly susceptible to rug pulls.
Rug pulls.
Yeah, where the creators just suddenly abandon the project. They disappear with investors' funds. And also scam tokens that just mimic popular ones to try and trick people. The market is hyper volatile. I mean, prices can pump 100x in a week.
Wow.
And then crash 90% in a single day. So it's essential. Always do your own research. Use a secured, non-custodial wallet like Solflare. Verify the contract addresses. Make sure it's the real coin. And maybe most importantly, never invest more than you're willing to lose, period. The deep insight here, I guess, is that while the accessibility and the potential for quick gains are really tempting, the risks are just magnified compared to more established cryptocurrencies. Hugely magnified.
Okay, that's a very important warning. From the wild west of meme coins, let's pivot again to a different corner of crypto, XRP and the Ripple ecosystem. It's been generating its own kind of buzz, but it seems with a more institutional and infrastructure-focused approach.
That's a good way to put it. There are indeed significant kind of bullish developments around the XRP ledger, XRPL. Circle, the issuer of USD Coin.
There's
They
more
said,
stablecoin.
right, the world's second largest stablecoin by market cap. They've officially launched USDC directly on the XRP ledger. And this integration enables high-speed, low-cost stablecoin transactions without needing bridges.
So no complex hoops to jump through between blockchains?
Exactly, which strengthens XRPL's stablecoin ecosystem significantly.
Yeah.
Also, at the recent XRPL Apex 2025 conference, Ripple revealed plans to launch an Ethereum virtual machine-compatible sidechain, an EVM sidechain.
The EVM, okay, what does that enable?
So the EVM compatibility, it basically allows Ethereum-based smart contracts and apps, those are decentralized applications, to operate on the XRPL. Using wrapped XRP as the native gas token, it essentially makes XRP much more interoperable with the huge Ethereum ecosystem, and that's planned for Q2 2025, already live on testnet.
So connecting ecosystems, what else?
Furthermore, Ondo Finance has introduced tokenized U.S. Treasuries, or USG, on XRPL. Initial supply of $30 million. And Nasdaq-listed Vivo Power International has partnered with Flare Network. It's a $100 million initiative to deploy XRP tokens in a yield-generating DeFi strategy that's decentralized finance. And they're adopting Ripple's own stablecoin, RLUSD, as its primary cash equivalent reserve.
Okay, wow. So this torrent of activity, what it really boils down to, it sounds like, is XRP is trying to build like a super highway, connecting traditional finance treasuries, corporate reserves with the crypto world, aiming to make digital asset transfers faster, cheaper, more integrated into global systems. That seems to be the goal.
That's a very good summary, yes.
But alongside these solid technical developments, we've also seen this really powerful, almost highly speculative narrative around XRP, especially bubbling up on social media. How do we make sense of these glitch claims and some of these viral posts?
Right, that's a crucial distinction to make, and it's important we present the full picture here. There's a significant amount of social media content, particularly from platforms like TikTok, reporting these alleged XRP price glitches, reaching figures as high as like $691,662 in July 2025.
690,000, that seems
Extremely improbable based on current market dynamics, yes. These reports often claim it's 100% not random and attribute it to kind of unverified concepts like shadow liquidity tests, quantum recalibrations, or institutional backdoors, suggesting things like the real price may already exist. You just can't see it yet.
Very conspiratorial sounding.
It does lean that way sometimes. Other viral posts mention Ripple applying for a U.S. banking license, or the Federal Reserve confirming an ISO 2022 launch date for July 14th. ISO 2022 is a global standard for financial messaging, which some believe signifies a massive integration is imminent for XRP. There are also claims of a $100 million commitment from a company called WebUse to build XRP-powered payment infrastructure in emerging markets. And, analyst predictions flying around of XRP potentially reaching $100,000 or even $11,898 in just 12 hours. It's really vital for listeners to understand that these are primarily speculative claims, circulating on social media, often lacking concrete evidence or any official confirmation.
Okay, so we have these solid technical advancements happening on one side, and then this incredibly strong, almost fantastical speculative narrative building on the other. For listeners trying to navigate this, what are the practical implications? How might XRP's price actually be affected, realistically? And how should someone approach managing their holdings, given this very polarized landscape?
Well, the prevailing sentiment among some in the community, the believers, is that XRP is quietly being chosen as the backbone of next-gen finance, with significant but maybe hidden institutional value. However, a key point for retail holders, for everyday investors, is that XRP currently can't be purchased directly by institutional investors in many jurisdictions, which has implications for how its price might move compared to assets like Bitcoin with much broader institutional access.
Right. The big money can't just buy it easily yet.
Exactly. And there are strong warnings circulating, particularly in these online communities, against storing tokens on centralized exchanges like Coinbase and Uphold, and advice to set up multiple off-ramps, ways to sell or withdraw for potential future withdrawals, emphasizing that, quote, most of y'all ain't ready if XRP were to spike dramatically. And of course, the ongoing SEC lawsuit against Ripple and its potential resolution, that's seen as a crucial factor impacting any future movements. So the bottom line is, while there's real innovation happening, definitely, the market sentiment is heavily influenced by these speculative narratives, making it a very high-stakes environment where extreme caution and, frankly, preparation for volatility are strongly advised.
Okay, super interesting dynamics there. We've explored the dynamic, often unpredictable world of crypto. Let's shift gears now to a market that, well, it hits even closer to home for most of us, real estate. The question, will the housing market crash? I mean, it seems to be on everyone's mind constantly.
It really does raise an important question. And the sources we looked at show a really clear divergence of opinion. A split. Some are predicting a significant crash, yes. They're pointing to what they see as alarming indicators. Price drops reported in 36 states. New home builds stalling. FHA loans hitting very low FICO scores, like 500, which is quite low, and delinquencies soaring to 11.3%.
11% delinquencies, that sounds high.
It does. And some are drawing direct comparisons to the 2008 crash, warning against falling into the same trap. There's one senior credit analyst for multifamily housing who suggests a Florida housing market crash is imminent, claiming over 500,000 people have already left Florida, leading to apartment defaults possibly doubling this year. And this analyst also notes high foreclosure rates in South Carolina, Delaware, and, again, Florida.
Okay, that sounds pretty alarming. Drawing parallels to 2008 is always going to grab attention. But is that the full picture? Are there other interpretations of these trends or, a different perspective entirely on where the housing market is headed?
Exactly. That's definitely not the only perspective out there. Many other real estate experts assert that the market isn't crashing, not at all, but is instead shifting or maybe normalizing after a period of extreme heat. They predict home prices will actually continue to rise, albeit maybe more steadily. Some forecasting, like a 3.3% annual increase through 2029.
So a rise, not a crash. What's their reasoning?
They argue that the core issue right now isn't really prices themselves, but high interest rates,
Yeah.
the cost of borrowing. Their view is that when rates eventually do come down,
Yeah.
and most expect they will at some point, that pent-up demand, all the buyers waiting on the sidelines, could cause prices to skyrocket simply because you'll have more buyers than sellers entering the market in 2025, essentially creating this backlog of demand just waiting for more favorable borrowing conditions. So the key insight from this perspective is that they view the current market more as a pause or maybe a rebalancing, primarily driven by interest rates rather than some kind of fundamental collapse in housing value like we saw in '08.
Okay, two very different narratives. Let's try and drill down into some specific regional markets then. See these divergent trends maybe playing out in action. What's unfolding in places like Texas and Florida, given these broader debates?
Okay, well, in Texas, home sales have indeed been slumping. That part seems clear. Active listings reached a 14-year high back in April, up 31% from the previous year. It's a lot more inventory. And prices have started to slide in some major cities. Austin down 2.1%, San Antonio down 1%, leading to a definite shift towards a buyer's market there. Houston, too, is now seeing its biggest price drop since late 2023. So Texas seems to be leaning towards that correction narrative.
And Florida. Beyond the general crash predictions.
Right. For Florida, beyond those broader imminent crash predictions from some analysts, the condo market specifically has experienced a major downturn, apparently driven by rising insurance costs, which have become a huge issue there, and also an influx of new inventory, both pushing property values downward, particularly in the condo segment. So again, in these areas, Texas and Florida, we're seeing more evidence that seems to support the correction or downturn side of the debate.
Okay. Now, California, it often feels like its own universe when it comes to real estate, doesn't it? What's the outlook there, especially given its, notoriously high prices and often unique market dynamics? Is it crashing too?
Well, interestingly, California's housing market is actually showing signs of gaining stability. It presents a much more nuanced picture. The statewide median home price in March was $884,350, which is actually showing a 3.5% rise from last year, and it marked 21 consecutive months of year-over-year gains.
21 months of gains. So no catastrophic collapse in California despite its reputation for extreme pricing. That seems like quite a contrast to some of those national crash narratives we heard.
It is a contrast. That's what the data seems to suggest, at least statewide. The California Association of Realtors, CAR, they forecast an increase in both home sales and prices for 2025. They project sales to rise 10.5% to about 400 units, and the median price increasing by 4.6% to $909,400.
What's fueling that positive outlook in California then?
It seems to be fueled mainly by an anticipated decline in the average 30-year fixed-rate mortgage. They expect it to drop to maybe 5.9% in 2025, down from 6.6% in 2024, combined with somewhat improved housing inventory levels. However, and this is a big however, for California, affordability remains a critical challenge. Huge challenge. Only about 16% of households are projected to be able to afford a median-priced home in both 2024 and 2025.
Only 16%, wow.
Yeah, 16. And regional variations are significant too. Los Angeles is expected to see a small price increase, while San Francisco and Sacramento might see smaller decreases. But then areas like Bakersfield and Riverside are actually poised for solid gains. So the overall trend for California, based on this data, is described more as cooling rather than crashing. Kind of a slow and steady, more balanced market is expected. The key insight here, really, is that while some regional pockets definitely face pressures, the broader California market seems to show resilience, likely driven by fundamental demand and that anticipation of eventually lower interest rates.
Okay, so we've navigated these two incredibly dynamic and frankly often contradictory markets, crypto and real estate. As we wrap up, what's the core message, the central takeaway you want listeners to really walk away with today?
I think the central takeaway is that both the crypto and real estate markets are just characterized by rapid evolution, constant change, and a really wide spectrum of perspectives, often conflicting ones. In crypto, we're seeing this fascinating shift towards diversification, institutional adoption of newer blockchain ecosystems like Solana and XRP, right alongside the wild ride of meme coins, which highlights both innovation and, let's be honest, immense speculation.
Right, two extremes almost.
Exactly. And then in real estate, while some regions clearly face corrections, significant ones maybe, the overarching sentiment from many experts points more towards a market recalibration, driven primarily by interest rates and these affordability challenges, rather than a full-blown 2008-style crash. So the common thread, I think, is complexity and the absolute need for discernment.
Yeah, it truly underscores how critical it is to stay informed, doesn't it? Considering all the angles, drilling down into the specifics, not just grabbing headlines when making any kind of financial decision.
Absolutely. And this raises, I think, an important question for you, the listener, to consider. In a world that's just awash with instant, often conflicting financial predictions, everywhere you look, how will you leverage these diverse insights we've discussed? How will you separate the solid data from the noise, from the speculation, to identify genuine opportunities and, just as importantly, mitigate risks, ultimately shaping your own path to being well-informed and hopefully achieving your financial goals?